I did want to talk about multiple time frame analysis. And Noah, this was instantly one of the topics you brought up for a potential coaches show because as the master trader, instructor and the person who designed and wrote that course years ago, you know how important it is to keep it simple. I mean, even just breaking it from the weekly to the daily to the intraday, that's a big, simple thing to do for a trader that can give you a lot of value. Explain multiple time frame analysis and how we use it as a trader. Let's start with a high level approach.
Yeah, well, I mean, basically, you want to get your big picture context. So you look at your weekly charts for your big picture context, longer term cycles, and then you look at your daily chart for shorter term trends and consistency with the longer term trend. One of the things that I look for always is confluence of trend. I want to see the weekly trend moving in the same direction as the daily trend. And you'll see times where that sometimes that can break down. Where I've got an example right here. I think recently on FedEx, where you look at for a period in time before this last couple of weeks here, the stock was moving lower and lower, and giving the express kind of that. Let me set up my right expansion setting there a little bit better, so that we can see that easier. And here on the daily chart, there was this period in time where it was making lower lows and lower highs, and that's a minor pivot downtrend. But if we backed it out to that weekly chart and you looked at that same setup from the weekly perspective, it looks more like a bullish retracement. And it's important to note, the market goes through cycles, the long term and short term, and it will continue with longer term trends. So the big picture trend is, you can see a very clear, obvious uptrend on this chart. And that uptrend, I think, is important to make sure we understand and respect that. So when you back out and you look at the that daily chart and you see that lower low and lower high, I mean, you can trade that to the downside, but I'd rather wait for the setup down here and watch for like that inverted head and shoulders or W type pattern right there and the breakout, and then it's setting up for a continuation of that weekly uptrend. And that's a good example of just two time frames giving you a slightly different story. If you'd come in and looked at that, a couple of weeks ago and before it rallied out of there, and you thought to yourself, oh no, it looks like it's going down. It's crossed below its moving averages. It's giving that lower low, lower high signal, and to have the ability to anticipate the reversal on that really only would come if you backed out and looked at the bigger picture and says, oh, well, look at that. It's just coming right down into a big support zone buy zone. And it becomes a little bit easier, I think, to time that. So that's a simple example of a weekly chart versus a daily chart. Sometimes you're looking for old history, like old price threshold, support, resistance zones, in addition to that, trend context. You want to trade with the trend because the trend is your, and I want to hear everybody else finish this sentence for me. The trend is your friend. There you go. Stick with your friends. And it's good to have more than one friend. So a weekly friend, a daily friend, it's all good.